If I could only buy one stock in 2026, I'd put every dollar into the company that just secured a potential $40 billion revenue stream from China alone. This isn't speculation, the deals are already being signed. Let me show you why this could be the smartest investment decision you make this year. Welcome back to the channel. I am diving deep into what I believe is the single best stock to buy now in 2026. We're talking about a company that is not just riding the AI wave, it is building the infrastructure that makes AI possible. I've spent the last week analyzing earnings reports, analyst ratings, and market catalysts. And what I found might surprise you. By the end of this video, you'll understand exactly why this stock deserves a spot in your portfolio. The company, NVIDIA Corporation, NVIDIA. Here's what makes NVIDIA the stock to buy now. As of January 9, 2026, NVIDIA is trading at approximately $185 per share with a market capitalization of $4.5 trillion, making it the world's most valuable company. But here's what most investors are missing: this giant still has massive room to grow. Why now? The perfect storm of catalysts. The timing for NVIDIA couldn't be better. Three major catalysts are converging right now that could send this stock significantly higher over the next 12 months. First, China just reopened as a market for NVIDIA's advanced chips, according to recent reports from January 2026. Chinese tech firms have placed orders for over 2 million H200 graphics processing units at $27.0 per chip, even after the 25% tax NVIDIA must pay to the US government. This represents over $40 billion in potential revenue from China alone in 2026. This is a complete game changer that wasn't priced into the stock just weeks ago. Second, NVIDIA's new Rubin architecture is entering full production in 2026. This isn't just an incremental upgrade. Rubin requires data centers to upgrade to 800-volt infrastructure, which NVIDIA also sells. This creates a double revenue stream that could accelerate growth beyond what most analysts expect. Third, the market itself is projected to grow at a 37% compound annual growth rate through 2030, according to Grand View Research. NVIDIA controls the picks and shovels of this gold rush. Financial metrics, the numbers that matter. Let's break down the fundamentals, because this is where NVIDIA really shines as a stock to buy now. Current stock price, $185 per share as of January 9, 2026. Market cap, $4.5 trillion. P/E ratio, 45.8 based on trailing 12 months. Forward P/E ratio, 26.4. Now, the forward P/E of 26.4 is critical. It means investors are only paying 26 times next year's estimated earnings for the world's dominant AI chipmaker with accelerating revenue growth. That's remarkably cheap compared to the broader tech sector average of 33. Revenue performance. In Q3 of fiscal 2026 ending October 2025, NVIDIA reported record revenue of $57.01 billion, up 66% year-over-year. The data center division alone generated $51.2 billion. Even more impressive, revenue growth is accelerating from 56% in Q2 to 62% in Q3, with analysts projecting 67% growth in Q4. Profit margins. NVIDIA maintains a gross margin of 70% and a net profit margin of 53%. These are exceptional margins that demonstrate pricing power and operational excellence. Earnings per share. Current EPS stands at $4.06 on a trailing 12-month basis. Wall Street expects this to jump to approximately $8.21 per share in fiscal 2027, representing a 75% increase in earnings. Cash position. NVIDIA holds $60.6 billion in cash against just $10.8 billion in debt, giving it a net cash position of nearly $50 billion. This fortress balance sheet allows them to invest aggressively in research and development while maintaining financial flexibility. Return on equity, an astronomical 107%, meaning NVIDIA generates over $1 in profit for every dollar of shareholder equity. This is world-class capital efficiency. Growth catalysts. What drives the upside? Here's where it gets exciting. Wall Street analysts currently expect $213 billion in revenue for fiscal 2026, then jumping to $320 billion in fiscal 2027. but Nvidia has a history of crushing expectations. Several analysts, including those at Evercore ISI, believe revenue could actually hit $350 billion in fiscal 2027, a 64% growth rate. The Blackwell chip platform is ramping production now, with hyperscalers like Microsoft, Amazon, and Google placing massive orders. Nvidia invested over $3.2 billion in capital expenditures in fiscal 2025, expanding production capacity to meet this unprecedented demand. The automotive and robotics markets represent another growth avenue. At CES 2026, Nvidia announced it will supply over 260,000 advanced GPS to South Korean firms, including Samsung and Hyundai Motor, for autonomous vehicle development. Analyst consensus: Wall Street is bullish. This is one of the most analyst-backed stocks in the market right now. Out of 64 analysts covering Nvidia, 60 rated a buy or strong buy. That's a 94% bullish consensus. Price targets: median 12-month target, $250, 33% upside. Evercore ISI, $352, 86% upside. Bank of America, $275, 45% upside. Citi, $270, 45% upside. Mizuho Securities, $275, 48% upside. Recent upgrades have been pouring in. Just this week, Mizuho raised its target from $245 to $275, citing sustained AI accelerator demand. Stifel reaffirmed their buy rating at $250. These aren't random guesses. These firms have teams analyzing every aspect of Nvidia's business. Risk factors: what could go wrong? Now let's be honest about the risks, because every investment has them. First, U.S.-China trade relations remain unpredictable. While China has reopened for H200 chip sales, Beijing could change course, or Washington could impose new restrictions. Second, competition is intensifying. AMD is gaining share in certain segments, and companies like Amazon and Google are developing their own custom AI chips for internal use. This could pressure Nvidia's market dominance over time. Third, valuation risk exists, even at a forward P/E of 26, if the broader market corrects or if AI spending slows faster than expected. Nvidia could face multiple compressions. Fourth, supply chain constraints remain a concern. Nvidia relies on Taiwan semiconductor manufacturing for chip production. Any geopolitical tensions around Taiwan or manufacturing bottlenecks could impact delivery timelines. The stock also has a beta of 2.31, meaning it's more volatile than the broader market. If you can't stomach 20 to 30% drawdowns, this might not be for you. The bottom line: why Nvidia is the stock to buy now despite these risks. The risk-reward equation heavily favors Nvidia in 2026. You're buying the world's most dominant AI infrastructure company at 26 times forward earnings, while revenue growth is accelerating, not decelerating. The China reopening alone could add 20% to revenue, and that's not fully priced into current analyst models. If Nvidia hits even conservative analyst targets of $250 by year-end, that's a 35% return. If it reaches Evercore's $352 target, you're looking at 90% gains. Few stocks of this size offer this kind of upside potential backed by fundamental growth rather than speculation. Here's a portfolio allocation tip: don't put all your money into any single stock. No matter how bullish you are, consider making Nvidia a 10 to 15% position in a diversified portfolio. This gives you meaningful upside exposure while managing concentration risk. Dollar cost averaging into the position over 2 to 3 months can also help you avoid buying at a local peak. Remember, all investments carry risk. Past performance doesn't guarantee future results. Nvidia could face unexpected challenges that impact returns. This is educational content, not financial advice. I am not a financial advisor. Always do your own research and consult with a licensed financial advisor before making investment decisions. Never invest money you can't afford to lose. So there you have it. Nvidia is my top pick as the best stock to buy now in 2026. Dominant market position, accelerating growth, reasonable valuation, and multiple catalysts converging at once. This is the rare combination that creates life-changing returns. If you found this analysis valuable, smash that like button. It helps this content reach more investors who need to see it. Now I want to hear from you. Are you buying Nvidia in 2026? Or do you think there's a better opportunity out there? Drop your thoughts in the comments below. And if you want more deep dive stock analysis every week that could seriously upgrade your portfolio, hit that subscribe button. Let's build wealth together. I'll see you in the next one.